Hello and welcome back to All Things Money. I'm your host, David Blain. Thank you for joining us for the second segment of the show today. We're talking about the role of luck and skill in investing. And if you have some free time and want to do some reading, I highly recommend Michael Malbussen's book. It's called The Success Equation, Untangling Skill and Luck in Business, Sports, and Investing. It was published back in 2012. There's also, I've talked about this on the show before, Nate Silver's book, where he talks about prediction models and probability. And this is something fascinating. And the reason I spend a lot of time studying these type of things is we want you to be spending time on things that you can control. We say this all the time, you know, especially with people, our clients, is things that you can control outside of the investing world, you know, your spending. You know, people are so focused on, you know, what's going on in the economy and the government shutdown and Ben Bernanke and all these things. And they ignore the fact that they're spending, you know, that they're eating out 7 nights a week and they have, you know, they're spending money on their kids like it's water. And so we want people to focus on things that they can control. And so by exploring investing, which portions are luck, which portions may be skill, you can focus your time on those things that you can add value in. But it's very important, not just in investing, but at life in general, is looking out, you know, the weather. A lot of people, if you're a weatherman, of course, you got to spend a lot of your time on the weather. But, you know, if you work in an office and you go from your car to your office building, you know, for the majority of the day, you know, you can't control the weather, so don't worry about it. I mean, I hear people all the time worrying about it. Anyway, that's kind of off topic. Back to what we're talking about here, the role of luck and skill in investing. Now, Malbussen, he's got a really interesting theory that I think is worth remembering. He says that a test to apply if there's any luck or if an activity is more luck or skill involved is to ask yourself if you can lose on purpose. That's a great analogy. We talked a little bit in the first segment is looking at luck. Is it reasonable to expect that a different outcome could have occurred? And another thing we want you to ask is it possible to lose on purpose? So if you're, you know, if you're a boxer and, you know, is it possible to lose on purpose? Sure, you could not throw a punch. And if that's the case, then the element of skill in that is higher and the element of luck is lower. If it's very difficult to lose on purpose, so for example, roulette, you know, can you lose at roulette on purpose? I mean, I realize the odds are stacked against you, but can you go there and say, I'm not going to win this turn? Well, no, because it's mostly chance. And so it's very difficult to lose on purpose. That means that there's a lot of luck involved. Well, in investing, it's really interesting because it's really, really hard to beat, say, the S&P 500. You know, people focus on that. You know, people picking stocks and bonds and, you know, different strategies. It's very difficult to beat your average index mutual fund, which is why the majority of our portfolios are constructed using them. That's kind of, we'll get into that another time. But on the flip side, it's also very difficult to lose significantly in investing. That's why I'm always amazed at when you read these stories of people that actually lose significantly more than the market. I mean, it's really, really hard to do. Now, you got to put some parameters around that. Of course, if you're, you know, buying on leverage or something like that, it is. But with some reasonable parameters, for example, if you have the S&P 500, and out of those 500 companies, you know, you have to pick, you know, 50 of them at a time to invest in, it would be very difficult to actually pick 50 companies that as a basket did a lot worse than the market itself. I know that sounds crazy, but it's true. You can prove it to yourself. One of the reasons it works is because if you intentionally go try to pick bad companies, they actually tend to have the highest returns. If you pick all, you know, really fast-growing companies, they could continue for a while. So it's very difficult to lose on purpose in investing given some sort of reasonable parameters as to what you could invest in. I mean, you can go, invest in swampland in Florida, and I realize there are things you can lose money on. I'm talking about investing in public markets with a reasonable set of parameters. So that tends to show that investing has a large element of luck involved, that it's very difficult to lose on purpose. The second thing is luck is very difficult to deal with psychologically. In the brain, you have the left and right side of the brain, and the left side immediately tries to connect causality to events. So if I made a lot of money doing this, it immediately looks for the causes of that. And that's just the way people's brains are wired, that they want to attach positive outcomes to some sort of skill, and they want to attach negative outcomes to luck. I mean, you see this all the time. There are certainly people that admit, their own fault or shortcomings, but for the most part, you see when something bad happens, people attribute it to the, bad luck, and when something really good happens, they tend to attribute it to their skill, and they, I did this or I did that. It's just a natural way that the brain function, and the way a really good investor, or in fact a highly functioning person in general, is able to distinguish what happens in the real world and separate the way our mind tries to interpret it from luck versus skill. Well, that's all the time we have for the second segment. When we come back, we'll continue talking about the role of luck and skill in investing. And if you could understand this concept, it'll really help you focus your time on things that you can control. So for All Things Money, I'm your host, David Blain. We'll be right back after a few short messages.